Hi, this is Kerry Artag with Wicked Stocks, bringing you the daily Tesla report for Friday, April 26, 2024. Let's take a look at the charts. This is well, where to begin? I don't want to spend a lot of time here, but we've been watching this channel structure now for many months. It held the December highs. We fell back to the channel support as indicated, and we've had some settlements below it that have been rejected. And in fact, most recently this week, when we came barreling back above the 156.94 channel bottom. Now I'm queuing today off of 157.51. I've reduced this to a session containment level only. There's only so much aggravation I can personally take when we close below it, then back above it. The more you slice and dice these long-term line studies, the less meaning they have. But nonetheless, it is still worth mentioning that we are above it, and that we are close to, if we close today, I'm pointing this out here on the far right. Now, I don't know if you know this or not, but you can download these PDF files every day, these newsletters with the charts, on the website. So I think the link is in the YouTube area. But 170.69, what is that? If I could zoom in here, I would. But I'm not going to. We've got a new low this week in the 130s, 138 and change. Actually, we came very close to testing this trend line that we'd mentioned of 138.35. We fell to within a half a point of that, and we've been rallying really ever since. Now, much of that was news and such, and I'm not going to go into all that. But the point I am trying to make here is that if we close above 170.69, which is last week's high, then we have a key reversal low, which I always see, especially on weekly charts, as a sign of an oversold market and one prone to meaningful bullish continuation. That's also called a bullish engulfing pattern, I believe, in candlestick speak. It's the same thing. You get an outside week, new move low, new move high. In this case, it's a new move low, and then you close back above the previous week's high, outside week, settlement above the previous week's high, following a big low or a big high, and you've got a sign of an exhausted market to the downside. Exhausted selling, inclined now for meaningful recovery. But as I say that, I still like following the channel structures. I think this will have meaning. 180.21 on the weekly chart. The same exact formation on the daily chart is at 177.95. So this is your sell zone. 177.95 up to 180.21 on the weekly chart. When I say sell zone, if you're long and you're a 3 to 5 day swing trader, a 2 to 3 week swing trader, I do think this is your area to take profits. If you're inclined to play both sides of the market and you like playing the short side, as we push into this 177.95 to 180.21 region, I do think this is an opportunity to sell the market. Now, I say that very carefully, because we've got some contradictions going here. I just mentioned how we may be in the midst of a key reversal low. And so I guess there's one way to look at this, and I don't mean to overcomplicate a short sale, but you could sell 177.95 up to 180.21 today, and as long as we close back below 170.69, which is once again last week's high, that would then also fend off the key reversal, and this market can and would have a likelier chance of easing south as we move through next week and even into later May activity. Holding below 180.21, we can look at this weekly chart here. We can easily fall back to 138.35, and there is still this channel bottom. Sorry, where is the channel bottom? I don't see it anywhere. I don't think we have it illustrated. There is a descending channel bottom that is not illustrated. Shame on us. But it basically includes the trade coming across here. 133.26 is that number. So let me just rephrase this, that as you sell, assuming you might, the upper 170s, low 180s, you can opt for the lower 130s and dropping within 2 to 3 weeks. And that is kind of the setup that I see right now. In terms of the longer-term directional dynamic, which I would say through May and even through June trade, it would come with a settlement today above the 180.21 formation. It looks a little bit cleaner on the daily chart. That would obviously also be above 177.95. And under that scenario, 2 to 3 month rally to what is now a 229.44 descending channel top. Are we going to see, that is my signal really for 229.44. And really not until then would be a settlement not only above 177.95, but also the weekly chart today at 180.21. If we close inside the 177.95 to 180.21 region, I just think it's too close to call to consider it a buy signal as we move through May trade. But if we close above 180.21, I do think that if you're short the market, you do need to reverse and go long. At the very least, you need to cover a short position if you are short following a settlement today above 180.21. Until then, that is the get short zone. And let's take a look at the daily chart. We've got 160.51 still. That is still a meaningful level. You can see what we have as a session containment level. And we also have 157.51, which is nothing more than the gap, the gap low, if you will, following. This is the Wednesday gap higher. I forgot, was it the earnings for Tesla? So we gapped above that. If we close below 157.51, I do think the market is back on its heels. 138.35, then likely within 3 to 5 days. Once again, 138.35 is that long-term trend line, and I do think within a week or two of closing back below 157.51, not even a week or two, maybe a full week, back to 133.26, which is a descending channel bottom, not shown today, but we will be showing it again. So once again, I'm going to outline the next 2 to 3 weeks in terms of the 2 to 3 week time frame. Selling the upper 170s, low 180s, 177.95 to 180.21, and then we can fall back into this line right now is in the mid 130s. And dropping. And this is the play here that I see for the next few weeks. If we close once again above 177.95 and above 180.21 on the weekly chart, just the opposite, bullish continuation. Now back to that key reversal high. Once again, if we push into this area, offer you a short sale opportunity, you do want to see this market close below 170.69, in my opinion. Is that enough to get out of a short position by the closing bell if we're trading above 170.69? Not necessarily, but just know that we come into next week with kind of a mixed bag. We got a key reversal low that suggests continued recovery, but we have yet to penetrate this meaningful channel top, which is trend defining, in my opinion, over the 2 to 3 month time frame. Until then, the 2 to 3 month time frame remains negative, and we can fall away back into the lower 130s, possibly lower as we move into a June trade. I think I've pretty much said it all. I'm going to leave it at that for Friday's Tesla. Please click like, share, subscribe. Check out wickedstocks.com. We put out a couple stock picks this week you may want to check out. One on Sony, actually, today, Thursday. I'm recording this on Thursday, of course. I'll be back Sunday afternoon with Monday's Tesla. You have a great weekend.